Well, a wild day and we have a lot to go over. Let's jump right into it. We all know why we're down. We're down because of tariffs. We're going to spend a little time on that, but there's a lot of other things that we need to cover. We're going to just start with this trend line. What I like to do is I like to use the closes because wicks are price reject. We drop that bad boy right there. We can see very clearly that we have broken this one. But wait, there is more. So if we come all the way back, we can see the big dog. And I think it's important to just spend a moment and look at this and go, okay, well, this is where we bounced before. Is this where we're heading? And people say, well, we can't possibly go there. Well, it's only about 8%, I believe, to get into this crosshair, which would be that major support level here, which would be that December 21st low. To get there. Can we do that? Yes, we can. How fast could we get there? It depends on a whole litany of things, but what does that give us? Another 10% down? It's, we're down 5 today. It's 2 days more of this. Is it possible? Sure. It's a shock to the market because it was worse than anybody thought. I mean, no investment bank had what they had, period. And you've all seen it by now, so I don't want to spend a lot of time on that. We still have to go over non-farm payrolls and some other things. But I would say this. I would say that when it hit, the way that this was done, where he did it at 4 o'clock, and I was purposely live for it, which is always why I say subscribe to the channel, click all notifications, because I will change the schedule. Like instead of doing the video I had planned for last night, it made more sense to be live for it, and people benefited from it greatly because I could explain exactly why we dropped and why we were going to continue to drop, which made life a lot easier for people within 60 seconds. You do this long enough, you start picking up things. So I've been doing it 25 years. You could just see things. Like you just see it like after a while. But once he did that, and he brought out his special graph, and then people were debating the graph, and it was funny because we were talking about it today in the community, and I even said, it doesn't matter if we agree with the graph or not. Like, that's the graph. If he says they're the tariffs, they're the tariffs. That's what he's going to negotiate. They're not going to change it because we don't like it or we think that it's ridiculous how they calculate it. It's irrelevant. Nevertheless, no matter where you stand on it, this is what happened. And then you can see the drop, and then the futures opened, and then we retested at that 630. And I think this is really important to get, guys. So you always want to mark these levels off and then just see how you act at them. And you could see that we respected that all day. So it actually looked like, oh, look, there's that gap. We held the gap, and then we tried to get through, up, down, not really rocket science, broke it, tried to rally, make the lower high, and then you retested that area again, broke, retested, and then that was it. And then selling end of day. And you're selling in the non-farm payrolls. And I'm not sure that's the right thing, but we're going to get to that in a second. Now, if we look at the NQ, really the same soup reheated. I mean, it's not really that much different. You can see the test, again, the test, and then the break end of day where people are just like, just get me out. I'll deal with this on Monday. I think Friday's close is going to be very interesting too, because are you really going to want to be in a position here? You're long or short heavily over the weekend and tariff deals are cut, things like that. I think that that's really what you have to pay attention to. If we see things like that, then that's going to be I just think we have to pay attention to it. I'm trying to figure out the nice way to say this. I don't think that you should be going on the premise because you're breaking down that we're just going to completely fall out of bed. I think you have to go on the premise that we don't know what's going to happen. And I'm just going to stress that. When you come in and on Wednesday, and obviously this is going to be different than this, or you're coming in and you're on Wednesday, and this is when the market looked. You were 6-1 on the buy side on the institution. So institutions are literally buying, and at the same time, they were also buying calls on their shorts to protect themselves from what they expected was going to be a rally, sell the calls, stay short, etc. What happened? The exact opposite happened, and this is where we are. So to think that you're going to plan something like this, and if you didn't plan this, you're not going to plan when this bounces. And I think that that's the important thing, and this all boils back to money management, right? So just kind of keep that in mind. If we look at these levels, I think that this is really important because you might hold in here. You might hold that 448. Is that possible? Yeah. Did people think that we were going to fall out of bed here on the 6th? Yeah. And did we? No. We wound up bouncing and rallying. This time it's different, people will tell me. Okay. I don't know that it's different. I don't have a crystal ball, guys. I can only tell you what's going on and where we're at. People seem really annoyed by that and they want someone to tell them what to do. I'm not really sure that people don't get that no one really knows when a bottom is actually going to form or a top. All we can do is look at these levels and see if we respect them or not on the technical side and understand the macro side. And for those that went in technically without understanding the macro risk yesterday, that's why you got smoked. So there was no technical technical that told you yesterday what was going to happen. There just wasn't anything there that was going to tell you that, hey, by the way, this macro event's going to come in and clobber the market. Like, just wasn't there. So when we look at something like this, are we oversold? Yep. Could we be more oversold? You could. I do think it's interesting that you're not even remotely coming down to these kinds of levels. But you could just keep working it off and hitting the line like you did here. I'm not really sure that tells us anything. So I think that takes us to the point of looking at the 5 and going, what are they doing? They're puking. They're just, get me out, get me out. So what does this mean to you? Well, what's your hurry to get in? And if you're short, and you're trying to short overnight, you're shorting a market that's down 5% going into non-farm payroll. And you're going to say, well, non-farm payrolls is going to be bad. Well, some people think it's going to be really good. And I'm kind of surprised by that. But the other side of this, and we'll get to it, the SOX looks god-awful. And one of the core reasons for it is this piece of data, and no one's really paying attention to it. I was going to save it for Saturday, but I think it's important before the weekend starts to just get this out to everybody. If you see it right here, like Microsoft, all right, they canceled a couple data centers before. They said, oh, it's not a big deal. Then they canceled more, but that wasn't a big deal because they were just moving. All right, now they're pulling back on data centers all over the world, from Chicago to Jakarta, and it's everywhere. So is this not a big deal either? At some point, it starts becoming a big deal. If you have 5 major hyperscalers, and one starts pulling back, CapEx will drop. It's just that simple. So when we look at something like the SOX today, and you see the left shoulder, head, right shoulder, you broke. So does that mean that you're not going to bounce tomorrow? No, you 100% could bounce tomorrow. But that might be where you start looking at some of these names and putting on shorts. You look at something like an MU, for example, people go, why is that down? Well, you're down because you have to deal with tariffs now, that in this level of tariffs that you never had to deal with on a commodity-based product. And then on top of that, they're saying it's immune, but there's all these different loopholes to it. But let's go on the immune side. If you're cutting back data centers, you don't need as much. You don't need AMD either. You know, it's interesting. I shorted this up in here at like 110. I still have the darn thing on. And it's kind of funny because everyone's looking at these things and saying, oh, well, this one's definitely going to break out. If you watch these averages, when they're pointing down like the 55, and then you break down through the 55 and you're in a downtrend, like these don't get easier to short when you're in a downtrend like this. It's pretty much like the simplest trade out there. And so here, let me just show you what I mean by this so that you can do it for yourself or at least look into it. So when you're in a downtrend like this, and you see how this average is in a downtrend, and you start cracking these, it really doesn't get easier to put a short on than any of these levels. And no matter where it's at, now I've been saying this thing's going back to 80, 81. Maybe I'll be fortunate enough and it'll happen sooner than later. But I think it's going to get there. I mean, if the market's going to come in, AMD is going to come in with it. It's just the way that it is. You look at NVIDIA today, and people think that NVIDIA shouldn't be holding the way that it is. I don't know what they mean by holding. I'm not really seeing the holding part. It's getting smoked, guys. Now I've got it declining. 55, and here's your 200. Everybody ready? Ooh, there it is, the death cross. So yeah, it's an issue. Is it the issue? No. The other issue is that if CapEx starts getting cut, it's only a matter of time before these numbers start getting. And the only thing, and not just semis, but across the board. So you have to realize the thing you're dealing with now is really just PE compression. Stocks are dropping because the PE was going to be at 22, and now we're saying that's going to be at like 18. For example, we went through this last Saturday with the Arete. So you had 22 and now you're at 18, right? And that's why you're dropping. The self-fulfilling prophecy part is when this goes from those levels in here, and that goes to, hey, by the way, we're going to be flat next quarter. Well, there goes the growth. And then what happens after the growth? Well, I can just close. After the growth goes away, the PE contracts. When the PE contracts again from 22 to 18, from 20 to 16, and the earnings come down, that's when these things can really start breaking. And that's when this stuff gets very, very obvious. I don't know that that's going to happen, but this stuff is foreshadowing. That's why it's dropping the way it is. That's what people aren't getting about it. It's foreshadowing that CapEx, that there's an issue. So that's why you're coming in. This is not just tariff. There's a subsector here that's dealing with it. But there's also other things out there that we should probably go over, and I think we should do it before Saturday. So let's get to it. So in the community, you've heard me yammer on about this over and over again, where the dollar, all you have to do to watch the Magnificent Seven is just watch the dollar. And you could do something along the lines as this as well. Just drop mags in here with it. And what you'll do is you'll just see that it's almost like looking in a mirror. It's literally the same thing. Why? Why is this? It's because of the conversion rate between the euro and the dollar. If a European bank owns Mag 7 as a reserve to put someplace to park capital, if the dollar drops, not only are they losing money in the stock, which they care, but they don't. but then they're losing money in the currency at the same time. So it's like a double whammy. Well, they'll just blow it out. And so when you have dollar weakness, you're getting Mag 7 weakness, Mag 7 dollar weakness. And this graph really hammers it home. Make sure you watch Saturday's video. It's packed. I have it all pretty much sketched out. So what do we see here, and why do we think that this is super important? Well, a couple things here that make me think that this is worth our time. If the dollar keeps dropping, here's the dollar versus the euro. If we look at that, there it is. It's the Mag 7 over and over and over again. Why? Because European banks are using it. And this is the gentleman whose research this is. And it's a much better looking chart. This is really important to get. So people are going out there and going, oh, well, Meta's cheap. Well, what's the dollar doing? Well, the dollar's selling off. So you're going to go against a European bank that's blowing out of their position because they're worried about the Mag 7 versus their euro exchange. Let me know how that goes. It's not going to go well. I'll jump to the end. Now, I have some slides here that I think are pretty interesting, and I wanted to share this. Reuters put this together, and what it does is it shows the deficit and surplus. And what they really want to go after is the areas where they have a problem, but that it's way too skewed. This is where I think they're going with it. I really think they're just going after China more than anybody. But the European Union, the way that this is structured, there's a lot of stuff that comes out of the European Union, quite frankly. And I was listening to Letnick today. There's a lot of stuff that comes out of the Commerce Secretary, that comes out of Europe that we just don't make. And I don't think that they're going to make it here. Now, is that going to affect us? It is. Letnick's point on agriculture out of the European Union I thought was fascinating. I'm just going to touch base on this because, I don't know, I think it's interesting, so I'm going to talk about it. The thing about it is, he's like, well, they're not buying our corn, they're not buying our beef. They have completely different rules on how they can modify their foods in Europe than they do over here. If you ever wanted to feel different, if you eat pasta in Italy versus eating pasta in here in the US, tell me how you feel. You feel completely different. So they have completely different rules. So I don't know how they're going to handle this. I'm sure they're not going to use my pasta test, but I do think that it's important to point that out. China is the much larger behemoth and issue, and I do think you might see some carve-outs. Mexico is fascinating. I actually think Mexico can benefit greatly from this because places like China and the European Union are just going to wind up going there and opening up a shop and having some kind of subsidiary or corporation there. I really think that that's where this is going. And I think Mexico can benefit greatly. I think Canada can too, quite frankly. But you have Brazil, United Kingdom, Australia, and we're actually at a surplus down here. I see where they're trying to go with this. We'll see how this goes and how long this goes on for, and what kind of carve-outs that we get. But I do think some of this wraps up fast, but I also think some of it's here to stay. What I thought was interesting, and why I'm bringing that up on the tariff side, because I don't want to keep showing the graph of just him holding up his special sign, but the ADP numbers were really interesting. So ADP is private. ADP does their own study with their own data from their payroll. Very different than the BLS data you're going to get tomorrow, which is broken down into 3 components, but let's get to it. So when ADP comes out, they came in at 155. And that is interesting because they look at this and revised up our forecast, March non-farm payroll 150, above 140. So, and this is from Goldman. But what got me about this is like, wait a minute, you're taking your non-farm payroll numbers up to 150? What about Doge? What about all these people that are being laid off? And what you're seeing here is, are we starting to see more people get hired because of what's going to happen over here? Is that where this is going? And people are saying, no, that's not where it's going. The data right now is saying that maybe this is going to happen. So people are expecting an awful non-farm payrolls number tomorrow because of Doge. We all are. And then we look at these numbers and they're at 150. Above consensus. Goldman is. Where do you see where Bank America is? Which, again, I think it's really interesting. But then you look at where the jobs are. And then you're like, oh, okay, well, where are we with the jobs? And you're like, employment service sector went 132, reflecting a 50K increase. 38 increased financial services. Goods producing industries, 24K. That's pretty interesting. So what that's telling you is if you produce a good here and you're an industry, you hired people, reflecting a 21K increase in manufacturing employment. So does does non-farm payroll start reflecting more manufacturing jobs? And I think that this is one of the things that we have to look at now. U.S., a resilient labor market. This is Bank America. We expect non-farm payrolls to increase by 185, much higher than consensus. I don't know why they didn't use much. I would have used much. Meanwhile, government job growth is expected to come in at just 10K. So where's Doge? Doge got rid of all these people. Yet they're telling me we're going to have net plus. We're going to have more people added. I think this is really interesting. And then they say this is where you're at. And then they break it down even more. Non-farm payrolls likely to increase. Leisure, cold weather. So for January, February, government job come in 10K, which is just crazy. Given muted claims data in the survey week, we do not expect Doge-driven job cuts to be a sizable drag, although the risks are to the downside. Thank you, Rocky. So they acknowledge it, but they're staying at 185. So what does this mean? Does it mean that names like Microsoft are automatically going to miraculously bounce up? No, I don't feel that way. I put the death cross in here on purpose. But no, I don't feel that way. I think you have to look at it and say to yourself, this means that we could rally because we're oversold, and then they might use it again to sell into tariffs. So what I would be doing on the tariff news, so I'd be marking off where like my 55s are on names, but that's just me. You should do what you're comfortable with. Something like Micron, where they just absolutely just kept selling it down over and over again on the data center news. And obviously with, people that aren't saying, well, you have to worry about tariffs. Okay. But you kind of still do have to worry about it to an extent. It's still going to affect them. Why? Well, it's going to affect them for a whole litany of reasons because of how much money you're going to have to other stuff. But nevertheless, if you look at it, that's a perfect technical break. And this is where you're at. And they did it on volume. So I think really where you want to go with this, when you look at something like FNGA, if you want to short that, or if you're looking at FNGD and you're going long this kind of stuff, or you're just looking at the stocks, some of this stuff is going to look great. I don't know what it's going to look like tomorrow after non-farm payroll. And again, super interesting day because gold, once it got back, lift, and then you see your evening star pattern here, up, here's your little star, breaks down, collapses, and then goes. What's that do? Well, that tells us they're getting out of gold. And they're getting out of silver too. So they're unwinding that trade. And you could say, no, they're not, but they are. They're definitely unwinding that trade. And so that tells us something else. Like, well, why are you unwinding that? Well, then you're not worried about inflation anymore. And then you go and take a look at the 10-year and you're like, oh, I'm at 405. And what was their goal? What was the Trump administration's goal? 350, 360? Wasn't that the goal? Something like here. So, and they wanted to get interest rates down. I think that's very important. Something like Apple, do they get a carve out? Do they not? Someone had a report I was reading. It was like $3,400 or $3,500 to make an iPhone if they had to do it in the US. They can't do it. And the other thing about these companies that people aren't really thinking about is not only can't they do that, but how are you going to do this in such a way where you would open a facility here fast? Like you just can't do it. You would just have to change the price of your phone. And I think it's pretty fascinating, but you broke a major level and you can all say it. And it is what it is, but I think it's worth pointing out. What else is really interesting that I should go over that I think is worth our time? I think it was pretty fascinating how Walmart held. But the fact that it's even green is a miracle in my opinion. And I don't know how, but when you look at something like Target and how disgusting that chart looks, I thought that was interesting. The cost and the way that this moved, this is the problem that you're running into with these kinds of trades. It's spray and pray, and I don't do this. But if you bought like on a 1 minute orb today, all of a sudden you were buying at 9:30 off the one, and then you're just going to spray and pray and hope it stays up for a minute. Good luck with that. But then from here down, that bar is $15. So I'm going to put a $15 stop on a 1 minute bar to do what? To try to make 21? No, thank you. I don't know, but some of these names shouldn't have dropped the way that they did, in my opinion, and we'll go from there. I also thought the resilience in Tesla is worth talking about. I had that in my notes to go over because a lot of these other names are rolling. The Meta and the Google, and people are going to say they're cheap, and then your comment's going to be, well, the dollar keeps dropping, and that's why it's happened. And then you're going to sound super smart. But look at something like that, right? See the undercut, and then we lift, and then very few names did that today. If you look at something like a Google, didn't do that. You look at Microsoft, look how that rolled. You can see they're all in the same shape. It's literally all the same shape. CVNA, they can't get out of fast enough. And even after this drop, I shorted this. We did well with it, caught it in the middle. That's probably worth going out. If you are missing something, your goal is not to just say you missed it. Your goal is to say, I know I missed it. You acknowledge that you missed it. And then you try to find a way. That's what you do when you see this stuff. So like for us, one of the key things was on a key level, and you can actually see them in here. But see like how you have this bar right here, and it's green, and see how that body encompasses that. that is literally a bearish engulfing. And at the time, it was at the bottom of the chart. And there's your wick. So not only do they take you up and over, they encapsulate all of that. That gives you a perfect entry. So here we were actually able to short it and did quite well with it. Actually did well on the puts too. The problem here that you guys are running into on the option side, I'm going to leave you with this because this is super important. The problem you guys are running into on the option side, you're buying puts. I was talking to one of the guys, one of the younger guys in the room today about it. He said, I keep buying options. The stocks keep dropping, but I'm not making any money. The problem is when the VIX is up here, the implied volatility in the option is so great that the VIX, they don't move as much because the VIX is controlling the implied vol. And that becomes an issue. We should do a video on that, actually. All right, that's it.